When trading all the CFDs, we have balance, we have equity, we have free margin, we have margin, and we have margin level. However, brokers, they added what we call credit. And actually, I would love us to look at the credit free margin so that we understand in terms of trading what is happening when you're trading all the CFDs. CFDs is just a short term for contracts for difference, right? Now, whenever we are actually going to be trading or investing ourselves in trading all the CFDs, all right, I would like us to actually understand the numbers so that we understand what we are actually doing. So in this case, I would like you to see the reality on trading, okay? Brokers, they will do whatever they can to make sure that you actually trade with them, and also they used your psychology against you. But that's not a bad thing. However, if you know how to actually count the numbers. As you can see here, we have what? We have a credit of 250, which is adding to our 250 initial deposit, which is the money that we deposited under what? Under balance. Now, when we look at what? When we're looking at the trades that we took here, such you can see that we have what? We took a trade of NAS 100, which is we went with the buy 0.01, and this is the profit that we are at the moment. So now, I want you to pay close attention to free margin. Free margin is the money that is free. And this money is minus from what? It's minus from the equity. Equity. So equity, it's money that you are actually, it's either you're profiting, which is the plus, or losing, which is negative. In this case, you can see that we are actually in profit. That is why we have what? We have an equity of this amount of money, all right? So when counting free margin, it's simple. Brokers to brokers, they are not actually the same. If you're going to be using the brokers that I'm using, such as the Derive, which is the links are provided in the bio if you're watching this video on TikTok. If you're watching this video on YouTube, the links are in the description below or in the comment section below. Please check those links if you do not see any of those links for you to open an account if you do not have a trading account. Now, when we're looking at what? When we're looking at free margin is money minus from what? Money minus from the equity. Money minus from the equity. How is it minus from the equity? It is minus in this way. They minus what? We minus money needed, which is this amount of money. We minus the money that is needed, which is margin. If right now you minus this, you take 33K minus 1.7, you will get what? You will get this amount of money, which is free margin, and it's money that you can use. However, if you're using my broker, such as the broker that I'm using, which is Derive, they will not allow you to use free margin to continue to what? Continue to add more trades, all right? To protect you from actually what? Risking more money. Now, the only way they actually can allow you, they allowed what? They allow if you go to a loss, this free margin will actually what? Start counting down instead of counting up. So now I believe you have a clarity on understanding here. All right. And for those who are maybe are confused, or you are confused on this lesson on what's happening here, let me explain this one in a better way. The credit here is a bonus that the broker gives you. It's a bonus, which is bonus. However, you're not allowed to trade with this bonus and lose it. You're allowed to what? To add more trades with this bonus, given that you have what? You have the amount of money. Some brokers, they offer 100% deposit bonus. In this case, they added what? 250, which is the bonus that they gave me in this account. All right. Now, this bonus will what? Will work the same way a leverage works. So now they are trying to actually induce you to what? To open more trades, or to add more trades into the initial balance that you have of 250. However, if you are smart enough, you understand the numbers, you won't do such a thing, which is actually what? Use less, according to my actually way of trading. So it is best for you to actually use your mentality to understand the bonus here, that I do not need this bonus. So moving along, let me actually give you more examples on this actually topic. In this case, we have what? We have such this asset that we have here. I want to actually give you a demonstration so that you actually don't have any difficulties. All right, you can see here we have what? We have balance. Balance is the money that we deposit, which is the money that we actually have in the account, which is we have 1.30, which is in pound. You can see that we have GBP here. And equity is the money that is floating. That if you say 0.08 GBP plus 1.30, you will get what? You will get the equity. Margin is the money needed for you to open 0.01. Given that you're trading AUD USD, and this is the price of where we actually place the buy for the AUD USD, right? And this is the current price where the market is moving. Now we are in a profit of what? We are in a profit of 0.80 pound here. All right. Okay. Which is we needed what? We needed 0.51. So to count money needed, it's simple. It's quite simple actually. However, I want you to know that when you're counting money needed, the money needed will not be always fixed. Reason being, it's not going to be always fixed. It's because the price where you place a buy here, you can see this price here, is actually fluctuating, is changing from time to time. And these are the things that you will need for you to actually count the money that you need. Let me just show with you so that you can see the actually what's happening here. So for you to count here, you need what? You need the contract size of this asset, which is in most cases is 100K. And or you need what? You need the price where you actually want to place the buy here, which is the buy order, all right? And then you need what? You need to actually have the leverage to divide the original money that you need, all right? So that you can actually be able to count this. So you actually what? You need this actually. And then the 100K, you will say 100K. You will say 100K times what? Times 2 times the lot size. The 100K times the lot size, which will give you a 1K worth 1,000 contract size, which is the unit that you bought, which is now we're going back to understanding that what we're actually really trading, which is the contract size. All right, now I'm having difficulties because it's kind of windy here. So the 100,000, which is the 1K here, you will times by the price where you actually place the buy, and then you will get what? You will get 65,252, 55, I think it's 65,256. This is the amount of money I think you will get, which is in GBP, right? Sorry, it's not in GBP, it's in USD. All right, now this is the amount of money that you need, which is 65K. However, if right now you have a leverage of 1:1,000, then you will actually take this leverage and divide by this, and then it will give you what? It will give you a amount of money that you need, which is 0.65, and it will be here. All right, so that is actually what the margin. Now under free margin is the money that is all minus from where? Minus from what? From the equity. All right, from the equity. However, once you open a trade, if right now you have 0 here, which means the money is actually what? Minus from this one. However, if the equity now start to make profit, that's where you have free margin. And the free margin will only be free if you're not losing on the equity. If right now here it's a red, then you'll see the free margin what? Minusing the amount of money that is left, given that you have what? You have what? The margin that is needed. So if right now you minus 0.51 on the 1.80, you'll be left what? You'll be left with free margin. All right, you'll be left with free margin. And this is actually a broker that I'm using, which is Derive. However, brokers that are actually offering you to use the free, to use the equity, then they will allow you to use what? To use the free margin to add more trades. That is why you will start to count from what? You will start to count from the equity, which is, you will say equity minus what? Minus the margin that is needed, and then you will get the amount of money here. So these are the two ways brokers work. All right, and then when it comes to margin level is quite simple. You will say equity divide by the margin times by 100, and then you will get what? The margin level here. All right, so whenever you're trading with the derived broker that I'm using, it's not gonna offer you that. That is why I would like you to understand on what's happening here before you start investing yourself in actually trading. So the faster way for you to actually be safe is understanding the value of what? The value of points. the value of points. In this case, I'll actually make another lesson for you to actually learn and understand more on what's happening here.